Assalamu alaikum everyone, hope you're doing well. So in this video I'll show you some important topics that may be tested in exam. Although it is about impossible to guess what can be tested in this exam. However, these are some popular topics that are always tested, so I thought I should explain some of them. So this is for A2 level economics paper 3 June 2024 exam series, and these are the important topics. Again, keep in mind this is not kind of guess paper. This is just a quick review what type of questions generally come in the exam, and you must know certain conditions and formulas and graphs to answer those questions correctly. So one question is from utility theory, and for utility theory there are certain things that are always tested, almost tested like every year, and they like include when total utility is maximized, the condition for that is when marginal utility is 0, total utility is maximized. And another question that is tested is the formula, that is marginal utility of one product, that is product A, divided by price of product A must be equal to marginal utility of product B divided by price of B. So these are two important things that are mostly tested. And indifference curve, examiner asks about the basic definition of indifference curve, or he gives the graph and asks question relevant to that. So indifference curve is the graph that shows different combinations of two products that give the same level of satisfaction. For example, if this IC gives 100 units of satisfaction, then all points along the PP along this IC curve will give the same level of satisfaction. And in indifference curve you must also know why budget line shifts in this topic. You must know why budget line shifts to the right or left. For example, if budget line completely shifts to the right, it shows increase in purchasing power or real income. If it shifts to the left, then it shows decrease in purchasing power or real income. And also shift may be pivotal like this. If it shifts to the right, again it shows increase in purchasing power or real income. In case of substitution effect, two budget lines cross each other like this, right? And it shows relative change. So important term here is relative change in case of substitution effect. This is substitution effect, this is price effect, this is income effect. Okay, so another important thing is you must be able to identify the consumer equilibrium, new consumer equilibrium position in case of normal good, inferior good and given goods, right? So for that you must know the main graph. Graph examiner gives you in the exam paper, and you have to just identify the right equilibrium position. So the graph is generally like this. So this is another line. I'm making them quickly. So there is equilibrium, one equilibrium at this point, another equilibrium at this point. So these two equilibriums are common, and another equilibrium generally examiner makes on this line, the right one, right? So one equilibrium can be at E2, the other can be at E3, other can be at E4. So these three equilibriums are important to know. E3 takes place when the good is normal good, and E2 takes place when it is inferior good, and E4 takes place when it is a given good, right? And marginal social cost and benefit, you must know the formula of marginal social cost, and marginal social cost is equal to marginal private cost plus marginal external cost, right? Marginal social benefits are equal to marginal private benefits plus marginal external benefits, right? So examiner may ask you to calculate marginal private benefit, your private cost, marginal external cost or external benefits. So you can just put the given values in the formula, and you can make the variable subject that is basically required, and you can easily find out the value. You must know these two formula, and then you can apply them. And examiner, another question is sometimes there are two questions from this topic as well, or at least one question always comes from objectives of firms. So The next topic is objectives of firms, and there are certain objectives, like one objective is profit maximization. When examiner asks profit maximization, the equilibrium will take place where marginal cost is equal to marginal revenue. And sometimes examiner asks sales revenue maximization, and for sales revenue maximization, marginal revenue must be equal to 0 and price elasticity of demand must be equal to 1. And for sales volume maximization, average cost should be equal to average revenue. And another objective that examiner tests is achieving allocative efficiency. And for allocative efficiency, marginal cost is equal to average revenue. And these are the important things that you must know, the conditions that you must know, and you must be able to identify from the graph as well. And another important objective that is tested is relevant to prisoner's dilemma, right? Prisoner's dilemma, you must know how firms cheat each other. And another thing is another important thing that is tested in objectives of firms is just give me a second. Other thing, another thing is principal agent problem, right? Principal is owner of the business, and agent is basically the worker. So there are conflicts that arise between principal and agent, because principals mean owner of the business wants to maximize profit, agents want to work less and get more financial reward. So conflict arises between them. So examiner gives you multiple scenarios and asks you whether a principal agent conflict will arise. And sometimes he asks in which situation a principal agent problem will not arise. So generally students are able to identify principal agent problem positive situation, and they find it difficult to find the situation when principal agent problem does not arise. So one exam question came in the recent exam paper that the owner of the business set a rule that if business profit goes beyond a certain level, then all workers will get share of the additional profit. So in this case there was no kind of principal agent problem, because now principal, that is owner of the business, as well as the workers, both have the same objective, that business profit must rise, because both are benefiting from each other. So conflict arises when both have different objectives, right? When objectives are same, principal agent problem does not arise. You must know features of perfect competition, monopoly and monopolistic competition, as well as oligopoly. And you must also know which one of them is productively efficient, allocatively efficient, and which one is dynamically efficient. So monopolies are generally dynamically efficient, because dynamic efficiency is achieved because of large firms, and they are able to undergo research and development, and they can use better technology, they afford to buy it. So monopoly firms having large resources can afford to buy machinery, technology, tools, and they can undergo research and development, while perfectly competitive firms are generally dynamically inefficient. And perfect competition is productively efficient and allocatively efficient as well. And you must know the other features of price discrimination, entry, freedom of entry and exit, contestability. So contestability is when there is freedom of entry and exit, new firms can easily enter the industry and existing firms can leave the industry. Then you must know the conditions of supernormal profit, normal profit, loss and shutdown. Supernormal profit is when there is basically excess of revenue over expenditure, like total revenue is greater than total cost, or average revenue is greater than average cost, or price is greater than average cost, right? So this is the basic condition of supernormal profit, right? Supernormal profit is earned when total revenue is greater than total cost, average revenue is greater than average cost, or price is greater than average cost. Okay? So these are the conditions for supernormal profit. Normal profit is earned when total revenue is equal to total cost, average revenue is equal to average cost, price is equal to average cost. Loss occurs when total revenue is less than total cost, average revenue is less than average cost, price is less than average cost. So these are the conditions for loss. Shutdown occurs when total revenue is less than total variable cost, average revenue is less than average variable cost, or price is less than average variable cost. So these are the basic conditions for shutdown. Shutdown is when firms basically stop production. Okay, so conditions and graphs for different efficiencies like productive efficiency, allocative efficiency, and dynamic efficiency. Dynamic efficiency is really simple. Average cost curve shifts downward, and allocative efficiency is achieved when MC is equal to AR, and productive efficiency is achieved when we produce along the same PPC at point X, let's say, or there is average cost is lowest possible average cost at the given level of output. So these are the conditions of productive efficiency. You must know the definition of productive and allocative efficiencies as well. Gini coefficient is another important concept that you must know, and it is tested in P3 exam, and this is really important. And Gini coefficient is the measure of inequalities between the rich and poor. When rich earn more than the poor, and the poor earn very less, then Gini coefficient will be bigger. And Gini coefficient ranges from 0 to 1, and when there are more inequalities, we will be near to 1, and when there are less inequalities, we will be near to 0. Right? So for example, if examiner gives the value 0.5 and 0.9, then this shows more inequalities than this. Right? You must know that. And Gini coefficient is calculated using formula. Gini coefficient is equal to area A over A plus B. Generally, examiner makes this Lorentz curve as well, right? So this is 45-degree line, and if Lorentz curve is this one, let's say this is Lorentz curve 1, and we have another Lorentz curve, let's say this is Lorentz curve 2, then keep in mind Lorentz curve 2 shows more inequalities and Lorentz curve 1 shows less inequality. The graph that is closer to the 45-degree line shows less inequalities, and the graph away from the 45-degree line, this is 45-degree line, basically the straight line is 45-degree line. The graph that is away from the 45-degree line shows more inequalities. Factors that shift the demand for labor curve, you must know them: supply of labor curve, and wage determination under demand and supply, where demand and supply of labor meet each other. This is demand, this is supply. And wage determination under the government, when government sets wages, they may be like minimum wage is above equilibrium, maximum wage is below equilibrium. You must know that when minimum wage is set, then demand of labor is less, supply of labor is more. It causes surplus supply of labor. And when maximum wage is set, then supply of labor is less, demand of labor is high. So this area shows shortage of labor. And monopsony and monopoly trade unions, this is also an important thing that is tested in the exam. So you must be able to identify this is let's say marginal cost, this is average cost of labor, and this is marginal revenue product of labor. On Y we have wages, and on X we have quantity of labor. So this is MRP, marginal revenue product of labor. Marginal revenue product of labor is also known as demand of labor, and average cost is also known as supply of labor. So in an open market where demand and supply forces are active, then equilibrium takes place at E, where employment is Q and wage rate is W. Monopoly trade union or just trade union sets equilibrium where MC is equal to MRP at E1, and they charge wages W1. And if we draw the perpendicular, quantity employed will be this much, and this is the point where monopsony will offer the wages. Monopsony is the single employer of labor, monopoly is the trade union of workers. So trade unions charge high wages, but monopsonies offer low wages, right? So this is how you can identify them. And calculation of MRP, this is really important formula. You must know that MRP or marginal revenue product of labor is calculated by multiplying two components. One is marginal physical product of labor and the other one is price or average revenue or marginal revenue, right? So MRP, generally if we talk about MRP in perfect competition, then MRP is equal to marginal physical product of labor multiplied by price. Marginal physical product of labor multiplied by AR, and marginal physical product of labor multiplied by MR. So this is an important formula you must know. MRP is the total revenue that is received by employing certain quantity of labor, an additional worker, sorry. And MPPL is the marginal physical product of labor. It is the total quantity that extra worker produces, and if we multiply it by price, by AR, by MR, we will get marginal revenue product. We are basically just replacing P with AR and MR because we know that in perfect competition price remain the same, so average revenue and marginal revenues are also same. You must know this graph as well, that is for perfectly competitive market or under MRP theory. So this is marginal cost of labor, also average cost of labor and supply of labor, and marginal revenue product of labor looks like this. This is marginal revenue product of labor. Equilibrium takes place at E, where equilibrium employment in MRP is Q, through MRP theory is Q. So keep in mind, equilibrium takes place when MRP intersects marginal cost when MRP is falling, not rising. So equilibrium will not take place at this point, rather it will take place at point. Transfer earning in economic rent is an important thing that generally comes in the exam. Okay, so MRP, economic rent and transfer earnings are the other economic concepts that are tested in the exam. Economic rent is the amount of money that is sacrificed by selecting another job. Transfer earnings are the next best alternative earnings that a worker receives from the next alternative job. So this is supply of labor, this is demand of labor. Demand of labor and supply of labor intersect each other at point E, where employment is Q, right? And wage rate will be set at somewhere at W, right? So this is wage rate. The area above supply curve and below the equilibrium wage is economic rent. So this area is economic rent, and this area is transfer earning. You must know that this area is below supply and above the equilibrium quantity is transfer earning. And the other thing is calculation of average cost and marginal cost. Average cost is total cost over quantity produced, and marginal cost is change in total cost over change in quantity produced. Okay, again keep in mind these are some important things that you must know when going for P3 exam, but don't consider all of these things will come in the exam, but may be tested in the exam. Economies and diseconomies of scale is an important thing that generally examiner tests in the exam, P3 exam. Economies of scale is when average cost in the long run falls due to the rise in output of the firm itself or by the overall industry. Right, when average cost decreases in the long run due to the expansion of firm itself, it is called internal economies, and when it falls due to the expansion of overall industry, it is external economies of scale. And you must know what external economies are, like internal economies are. Internal economies generally include like diversification or risk bearing economies, technical economies, financial economies, and marketing economies as well. Right, so these are the important economies, internal economies. Then external economies are like labor economies, ancillary firms, cooperation, and research and development. And diseconomies is when long run average cost increases due to the expansion of firm itself or overall industry, and you must know them as well. Generally examiner asks about like transport diseconomies. When overall traffic congestion increases, it causes external diseconomies of scale and average cost increases. You must know minimum efficient scale as well. For example, we have quantity on X and we have cost on Y. This is average long run average cost, this is long run average cost. This falling part is because of internal economies of scale, and this lowest point is constant returns to scale or minimum efficient scale, and this is external internal diseconomies of scale. So when average cost falls, it is falls like this, it is because of internal economies of scale. When it increases, it is because of internal diseconomies of scale. When there are external economies of scale, then average cost curve completely shifts to the to downward. So this is long run average cost 1, and it is because of external economies of scale. When there are external diseconomies of scale, then average cost curve will shift upward. So average cost, long run average cost curve shifts because of external diseconomies, and there will be movement along the same average cost curve because of internal economies. Like from point A to B, it is like internal economies of scale and internal diseconomies of scale. Minimum efficient scale is the lowest point of the long run average cost. So this is the minimum efficient scale, right? Minimum efficient scale is when average cost stops falling and it reaches the lowest point. Then law of variable proportion, it is the law that basically shows the relationship between inputs and outputs and shows the returns to scale. And returns to scale are of three types. One is internal returns, increasing returns to scale, then decreasing returns to scale, and constant returns to scale. Increasing returns to scale is when input increases with lesser rate but output increases with greater rate, right? So average cost in this case falls, so average cost falls. And this then is like decreasing returns to scale, and during decreasing returns to scale, average cost increases, and it happens when increase in input leads to less than proportionate increase in output. And constant returns to scale is when average cost remains the same, right? In this case, input and output increase with the same proportion. So keep in mind these questions are relevant for first 15 questions, and these are from microeconomics, and these questions are based on knowledge. You must know the conditions and graphs and everything. If you don't, then you can't basically solve them, because you can't use common sense in microeconomic questions, right? Common sense can be used in macroeconomics mainly, because if even you don't know exact things, sometimes you can still judge what can happen, right? But in microeconomics you must know the basic conditions and graphs and everything. So in macroeconomics, examiner asks question about multiplier and its calculation as well. Multiplier is some constant value which shows that increase in investment leads to multiple times increase in national income. So multiplier is change in income over change in investment. And to find out the value of K, we have multiple formula. In two sector economy, multiplier is equal to 1 over 1 minus MPC or 1 over MPS. It is like in two sector economy. And multiplier in three sector economy is 1 over MPS plus MPT. MPT stand for marginal propensity to tax, MPS is marginal propensity to save, and MPC is marginal propensity to consume. Another formula for open economy is 1 over marginal propensity to save plus marginal propensity to tax plus marginal propensity to import. Examiner gives these values and you have to put them and find the answer. And sometimes examiner also gives the equation like this. So consumption is equal to, let's say, 100 plus 0.2 y. So keep in mind this 0.2, that is the coefficient of y, is marginal propensity to consume. And to find out marginal propensity to save, 1 minus MPC gives us marginal propensity to save. So 1 is total income and MPC is given. If you put it, then it means 0.2 is 20% of income. If 20% of income is consumed, then 80% is saved. So 0.8 will be, in this case, 1 minus 0.2 is equal to 0.8. So 0.8 will be marginal propensity to save. You must know the formula of accelerator. Accelerator is opposite to the multiplier, and accelerator is equal to change in investment over change in income. So y is income, I is investment. So just we basically reciprocated this. And now moving to national income equilibrium, where leakages and injections are equal. There is equilibrium, and leakages are the ways through which leakages are the ways through which income is leaked from or withdrawn from the circular flow of income. And leakages are equal to like saving plus taxes plus imports, and injections are equal to investment plus government expenditure plus export. So examiner may ask about this condition as well, and examiner may also ask to find out any one value out of this formula as well. Like examiner may ask to find out saving or taxes or imports or investment or anything that is given in the statement of this equilibrium position. And you must know the concept of 45-degree line and aggregate expenditure line as well. And you must know the relationship between different objectives when inflation increases or unemployment increases. What happens to inflation, economic growth, and balance of payment? You must know them as well. Unemployment and inflation are negatively related in the short run, because whenever unemployment increases, inflation will fall, because high unemployment means people have less income and they can consume less, so aggregate demand falls, and when aggregate demand falls, it leads to fall in inflation, and when unemployment falls, inflation rate will rise. And you must know other things as well, and you must know the formula to find aggregate demand. Aggregate demand is equal to C plus I plus G plus X minus M. Okay, so this is a formula to find out aggregate demand. Budget, you must know the meanings of budget. Budget is the income and expenditure summary of the government, and budget can be surplus, deficit, or zero or equilibrium. Surplus budget is when government revenue is greater than government cost or expenditure, and deficit budget is when government revenue is less than its expenditure. Equilibrium budget is when revenue is equal to expenditure. Okay, so when government adopts deficit budget, it increases aggregate demand. When it uses surplus budget, it decreases aggregate demand. Okay, so the next thing is you must know the tools of fiscal, monetary, and supply side policies. And fiscal policy is the policy of government that manipulates taxes and government expenditure. Monetary policy is the policy of State Bank of the country that manipulates money supply. Monetary policy is the policy of central bank that manipulates money supply, interest rate, and exchange rate of currency or credit regulations. Supply side policy is relevant to education and training of workers, trade union reforms, capital expenditure of the government, etc. And devaluation of currency and revaluation of currency, you must know their impacts. Marshall-Lerner condition and J-curve phenomena. J-curve is formed like this if there is devaluation of currency, and it is formed inverted J-curve like this if it is a revaluation of currency or appreciation of currency, right? So revaluation initially causes surplus, and in the long run it causes deficit, and devaluation causes deficit in the short run, and surplus of balance of payment, and it causes surplus balance of payment in the long run. Devaluation causes deficit initially, but in the long run it causes surplus balance of payment. Reverse is for revaluation of currency. So these are some important things that you must know, and I wish all of you best of luck. Keep in mind, again, this is not kind of guess paper, because no one can guess what will come in MCQ's exam, and because there is a variety of MCQ questions that may be tested. So if you know all the conditions and graphs that I have explained, then definitely they will help you a lot. So I wish all of you best of luck. So after the exam, please give me your feedback. How did it go? You can write in the comment to this video. So see you inshallah, and best of luck, since it's the last exam for A2, and then you are going to go to your university. So I wish best of luck with your university life as well. So stay connected. Thank you so much. Allah Hafiz.